Oil built empires. It fueled wars, alliances, and fortunes. But now, the age of oil is ending. As the world moves toward cleaner energy, a silent reshuffling has begun. The question isn't if oil will decline, but who rises after it. Today, we examine the economic and geopolitical winners and losers of the energy transition. Since the 20th century, oil has been the lifeblood of global power. Saudi Arabia, Russia, the US, all shaped their dominance around oil flows. But with the Paris Agreement, climate targets, and electric vehicles rising, fossil fuels are no longer the future. The International Energy Agency now predicts that oil demand will peak before 2030. The ground is shifting. And in this new game, resource abundance isn't the only advantage. Flexibility is. In 2022, Norway, an oil exporter, announced its sovereign wealth fund would begin prioritizing green investments over fossil assets. It wasn't symbolic, it was strategic. While petrostates clung to the past, Norway pivoted ahead of the curve. Its economy, once built on drilling, now funds AI labs, wind farms, and battery plants. This was a silent blow to oil-dependent nations who failed to diversify, and a warning shot to those still betting on barrels. The new energy economy isn't just about electricity. It's about control of critical minerals, battery storage, and clean infrastructure. China leads in lithium refining. The US is building domestic solar and EV capacity. Meanwhile, countries like Nigeria and Venezuela, once flush with petrodollars, face structural collapse. In the green economy, winners aren't defined by what's underground, but by what's being built above ground. This isn't a climate story, it's a supply chain realignment. Today, Europe subsidizes heat pumps and hydrogen pipelines. India races to expand solar grids. The UAE hosts climate summits while buying stakes in wind farms. Even Turkey has launched its first domestic EV and solar factories. But energy transitions aren't just technological. They're industrial revolutions. And in every revolution, there are factories built and fortunes lost. Those who control the infrastructure control the outcome. In 2024, a major US automaker canceled a billion-dollar order of internal combustion engines from a Saudi supplier, citing strategic decarbonization. The impact rippled. Stock value dropped. Oil revenue projections shrank. The real loss? Leverage. The petrodollar system had encountered its first organized retreat, not from a war, but from a boardroom. The oil age won't end with an explosion. It will end with a negotiation, one trade deal, one technology, one battery at a time. The question isn't who drilled more, but who adapted faster. Energy has always defined power, but power now flows through circuits, not pipelines. Daniel Yergin. If strategy, history, economics, and finance shape the world, this is where they converge.